We're live.
Thank you, Maria. Hi, everyone. Happy Friday. Welcome to another episode of VC TV, the Venture Capital TV from LaToken. Today, we're going to talk about venture capital insights into green energy and environment. Energy debt. Let me just start with a brief, short intro about this topic broadly, and we go around asking each of you some questions. Energy debt and equities underperformed the broader markets in 2019 amid trade tensions. As we know, weak demand trends and other challenges. However, we see some green shoots emerging in 2020, apart from the COVID-19 pandemic, and believe continued volatility and price dispersion will create opportunities for active investors. Myself, Sunny Mohanty, I'm the Regional Director of LaToken based here in Singapore. I welcome you to this session today. Hi, everyone. So firstly, I would like to ask you to give a short intro about each of yourself, like what are you doing in terms of investments in the space. I know Natasha, I know Jennifer, I've spoken to them before. Hello, girls. Welcome again. Happy Friday, happy weekend. Max from Hong Kong, I think he's joining us for the first time. Max, would you like to start with a short intro about yourself, what do you do, and then we can just go around asking the ladies?
Yeah, definitely. Thank you for having me and glad to be here. I am Max. I currently sit in Hong Kong. I'm a venture partner of a Hong Kong-based family office. I've been with them for about two plus years. I originally joined. My background in training is in data science and computer science. So I used to be a data scientist in Silicon Valley, especially looking at use of big data for financial services. And then I had a chance to write a master's thesis on climate investments. So I became very interested in the problem of climate change and sort of how it's actually going to sweep through many parts of our society, and the way that and finance can be a really powerful tool to do that. And during my tenure at the family office, I've been focused on blockchain as an investment sector. So I've had a chance to visit many parts of the world and see a lot of different projects. And so I'd love to share with you today some takeaways I have about the utility of blockchain actually for helping solve climate change issues.
Great. We'd love to hear insights, Max. Welcome again. Jennifer, since you are not on mute, can you please help introduce yourself to our viewers who don't know you and maybe listening to you for the first time?
I am Jennifer Arkhurst. I'm a lawyer and owner of Arkhurst & Abdallah Consultancy, legal consultancy in the UAE. I have primarily had my experience in the energy industry in the UK as well as in the UAE. I've worked in the oil and gas industry, in electricity as well as water. Hence, I'm here to speak to you about green energy and what is going on in the MENA region. And I'll focus particularly on the role that the oil and gas industries are playing in this particular industry, particularly since COVID-19.
Great. Awesome. Thank you, Jennifer, for that short, quick intro. Next, we have Natasha Berry again. Hi, Natasha. Hey, welcome back.
Hey. Pleasure to be here.
Yeah, same here. Please help introduce yourself. Today's a Friday. Please just relax and just let's have a free flow of discussion. Yeah.
Yeah, I got my Friday mojo on for this. I am the co-founder and partner of Venture Gurukul Capability Work Fund, which is an early stage VC fund focused on investing in opportunities in this post-pandemic world. And look at lucrative opportunities in terms of companies which are doing digital transformation of day-to-day transactions of consumers and businesses, and transactional driven businesses which have potential for revenue generation with each transaction. So there are a lot of India's economy is made up of small transactions. So ventures which are doing digital transformation of these small transactions from more offline to online. So this is not just limited to B2C ventures, but even B2B ventures. And this is a SEBI-registered Cat1 fund. And it's a pleasure to be part of this webinar again and talk more from opportunities in micromobility segment and opportunities in electric vehicle and the rise of the same in India and the opportunities around it.
Absolutely. I know we just had a short discussion before we went live. We'd like to hear more from you as well on that. Thank you, Natasha. Welcome again. So I would like to start with Max. Max, you just mentioned that you wear two hats, right? So we'd like to know about your two hats and what kind of recent investments that you made.
Sure. So I mentioned earlier, one of my hats is actually at the family office, where I was looking at a lot of interesting opportunities in the digital asset sector. We were pretty active in 2018. I had a chance to, meet a bunch of exchanges and some public chains as well. One investment that I personally made as sort of a small angel check, I think is actually quite interesting. Actually, is a Switzerland-based bank. So it's a financial institution that recently got a bank license in Singapore. They're one of the two guys there, and they've actually been able to hold crypto as a custodial body. And I think for me, just to sort of expand on this particular concept a bit more, I think where we're going post-COVID, especially, is we're looking at what money means, especially when we have the financial economy doing really well, while the average people are really struggling on the ground. And I think the ability for people to actually have ownership in the financial tools they use is actually very key, right? Like, in Hong Kong, there's a huge amount of banks here. Very few of us actually own the bank shares, and very few of us have decision-making level in the bank. But what's happening in DeFi, I think, is that there's a way for users, the popular DeFi users, actually become co-owners, right? Either of the governance token or some other representative token. And it gives them a chance to have vested interest, right? And so you have your customers also becoming shareholders, and that actually is really, really powerful. So, this particular entity I was mentioning in Switzerland, I think they're the beginnings of this hybrid model where they have the regulatory muscle in order to go through the painful process of becoming a licensed bank entity, and also they have the eye to the future and actually understand that it's important to have a digital asset account as parallel to a fiat banking rails that we're accustomed to. So I think that's a company we're very excited to see more come from, and I think personally I feel it has a lot of positive development. And then I'll just briefly mention a bit of my other hat, which is like sort of more on the venture building hat. I realized actually, especially after the sort of the relative crash of 2019, that it's sometimes important to have a lot more hands-on interactions with especially this space. And so based on that principle, I decided to start finding some engineering capability and incubating our own ideas in-house. And so a recent idea I've been playing with is actually this enormous synergy between the carbon credit market, which is responsible for helping companies and individuals actually understand their personal contribution of carbon emissions, and actually what's happening in the crypto market. Both of them are roughly about $200 billion. I think crypto now is about 300 billion. But they have very similar yet diametrically opposite interactions. On one hand, crypto is a retail populated interaction that is very volatile, but is really, really sticky for the people who actually interact with it, right? And then the larger audience actually are very afraid and they sort of don't want to touch it. On the carbon stuff, like I think every person on the planet actually cares about climate change to some degree, right? But very few of us actually have anything to do with what's happening with the carbon emissions. Like I don't think anyone on this entire interview has ever even heard about investing in carbon credits. And so what we are thinking
I'd like to butt in. I have done some carbon trading.
I think
So
Natasha
the CERs, which were part of the EU ETS emission trading scheme. So India, as a part of a developing country, you can take credits offsets from here and use a percentage of those offsets to accumulate with your emissions reduction in EU. So yeah, there was huge opportunity. As until this was prior 2012, right? But there was no extension of the Kyoto Protocol post 2012. So yeah.
Yeah, I think so. That's amazing. That is absolutely fantastic, and I'm so there's a lot of optimism from me here. I think that unfortunately the retirement of the CDM mechanism has been a big damage actually to a lot of people who invested heavily in these credits. But on this particular point,
I think a lot of people were just looking at some loopholes in terms of investing in some HFC projects, HFC reduction projects for especially refrigerators and other things. And somehow they got into the loophole of proving the additionality, getting past the additionality prerequisite for the CDM, and it seemed a bit like a little scamish. So from that perspective, and I don't know how effective it was in actually doing some genuine emission reductions and moving to clean energy. Yeah.
Yeah. So I guess just to take a step back, and for the people listening on call, what Natasha's saying is that there was a mechanism after 2005, it's called the Kyoto Protocol, where there was an ability for companies to actually create an emission reduction unit, a certified emission reduction CER, and have that count as an eligible unit in the European compliance market, where the companies in Europe emitting CO2 had to basically account for how much they emitted and turn in the equivalent number of credits at the end of the year as they had emitted that year. And so there was a pull demand actually to be able to sell these units from a developing country, in India and China, to Europe, and have them be able to account for that. And there was a huge demand, and a lot of money flowed actually, back to the countries to sort of, produce more renewable energy. But as you were mentioning, and I think, I'd love to talk more about this, in more detail later on in this session. There's also the carbon credit market has also been plagued with, a lot of crises of confidence, transparency, and veracity, right? And the double spending concept that we've heard about in the crypto world actually has a similar concept of double spending in carbon markets. Right. So, anyways, so just to give back the floor to our host, Sunny, I think that there's something really interesting waiting to be done there.
Yeah. Okay, we can come back to this later more, but yeah, I mean, you mentioned about 2005, and Natasha mentioned prior to 2012. So how blockchain technology going to change the industry? We'd like to know more about it later. So thank you, Max, for that. So Jennifer, welcome back, and please tell us what's happening. What are you currently doing? Where are you currently investing?
Well, I'll start off by saying that the MENA region has been one of the most popular regions for green energy outside, North America. And global investors appreciate the low carbon potential of this region, even though it's a hub for oil and gas trade. Currently, the UAE and the MENA region is leading in green energy, but going specifically to the oil and gas industry, the oil and gas industries, particularly the major companies, have known about green energy for a long time. They've known about it for decades. But the focus has always been, on fossil fuel and coal and those traditional sources of energy. And up to last year, it accounted for 80% of the global energy consumption. But this year in particular, there was a report that came out from the International Renewable Energy Agency. And in that report, they stated that investments in, renewable energy as well as green energy is a lot more than oil and gas. And one of the reasons is because of the impact that the COVID-19 has had on the oil and gas industries. Prices are rock bottom. We have a situation where the OPEC cartel are finding it difficult to control oil prices. Plus the fact that you have the responsibility that these oil and gas companies have of reducing the CO2 emissions in the atmosphere, which affects climate change. So this particular year, some of the oil majors such as BP, Shell, and Total made judgments that they felt it's best if they invest more in a green energy space. And you have deals being formed between some of the major oil companies as well as national oil companies in the region into green energy projects. So, for example, as far back as 2018, Occidental Petroleum formed a deal with GlassPoint for solar green energy. And then in January 2019, Total made a commitment that it was going to have 20% of its activities dedicated to green and renewable energy from now up to 2035. And then you have the same company, Total, having a deal formed with Qatar, whereby it's going to help Qatar build its solar plant, which will cater to 1/3 of the country's energy consumption. And then there are more companies. There's Shell as well, has had deals with other energy companies and energy efficient companies. And you have other companies as well. But I think what has got these oil companies to make the shift is because of the losses that they're making in oil and gas, their traditional forms of activity. And they are beginning to realize that, renewable energy and green energy may give them a lot more ROI, or return on their investments, as opposed to the traditional activities that they had. And it's also to do with the fact that they have this responsibility to, contribute to, a better environment and so forth. And so we see this shift, and you can call it pivoting, since COVID-19 into this space, and then it's growing, and we wait to see what some of the oil companies such as Qatar Petroleum and ADNOC and ENOC in the UAE are going to be doing in this space.
Great.
In terms of investments, in terms of investments, I don't know any investments right now because, in this region in the past, the investments have been coming from Latin America as well as Asia Pacific into green renewable energy, particularly solar energy, solar power, and also some European countries, which are promising to continue to invest for the next 5 years. But one of the reasons why there isn't a lot of investments, particularly from the banks, is because of the fact that green bonds and the whole idea of green finance is all new. There was only one green bond issued in 2017 by the National Bank of Abu Dhabi for $587 million US. And that's about it. There was another project whereby Mazda in Abu Dhabi issued 75 million revolving credit for its own projects. But green finance is still growing, and Dubai wants to be the lead in this space because it's got a commitment as part of its clean green strategy for 2050 to turn Dubai into a clean environment as well as a green economy. But other than that, there's not a lot of funding. There's talk about preferring perhaps Sharia compliant instruments to the traditional forms of funding, but that too is still in a discussion phase, and not much is happening there. So for my companies and my clients, I'm not aware of any investments in green energy as of now.
Okay, so you're talking about just specifically UAE market. Is that correct? Am I correct?
I'm talking about the UAE market, but generally the GCC, especially the oil companies, what they're actually doing in the space, they're going to be investing more in either by going into joint ventures with other companies that are really operating in this space, or having projects of their own. Because it gives them more return on investment than their traditional forms of business, where they're making a lot of losses and there's lack of control over oil prices. I mean, the oil prices have been declining since 2015, and it got worse with COVID-19. So
yeah, that's correct. So thank you, Jennifer. That quickly brings me to my next question, because of the oil prices, which has just gone down because of, as you rightly said, because of the virus. So I would like to ask Natasha, what drove challenges to energy markets in 2019, and how do you see 2020 unfolding?
Yeah, I think I'd comment it from the tech perspective and the opportunities around it. Like the previous speaker rightfully said, right? There's been no investment which has happened in clean energy so far this year. Let me just highlight $9 billion of investment have been done this year in the micromobility segment, right? And most of the micromobility segment investments which have been done has been that e-scooter shared services or e-scooter standalone sort of services, which are being offered to users who are willing to micromobility, who are willing to do the commute of less than 5 kilometers a day. And the opportunity in India, I think, is huge. It's ripe for disruption, and something like the pandemic right now just escalates this, where people are very cautious about using the public transportation. And public transportation, in terms of metros, buses, have been a major source of commute for people in India. And interestingly, 70%, almost 80% of the work-related commute in India is falls under 5 kilometer, less than a 5 kilometer radius, right? So there's a huge opportunity from disruption from that standpoint. And I think it's an exciting market. It'll be interesting to see how this shapes up in the pandemic, where I think the current metros, because they didn't really plan for this drop in demand all of a sudden, and are now going to the government in terms of providing some sort of subsidy, because the revenues have been dipped quite a bit. At the same time, it gives opportunity for micro-mobility, e-scooters. You have companies like Yulo in India, which are working very aggressively on this, and gives the opportunity for a solo commuter to travel by himself without the opportunity or interaction of sitting next to someone, or being in close proximity to someone and breaking the social distancing norm, which is something of huge caution among people.
Yeah, I think I totally agree. I mean, I have heard the concept of EVs, vehicles, as you say, electric vehicles, because that was a startup who contacted me like last year, pre-COVID, and they were looking to raise funds. During the time, I was not very keen, but as you rightly said, because of this virus and social distancing and everything else, I think you're saving the planet while you are maintaining the physical distance as well. Great. Thank you, Natasha.
Converting to a pure play electric is going to be in a phased manner. So the first phase is always the public transportation, and the government has done a lot of tenders and public-private partnerships to roll out e-buses. The second phase is scooters. India is the largest market for scooters in the world. Like, we have huge penetration for scooters over here. So, and it's an easy entry point from an e-scooter perspective. So shared mobility around that to come in through. And you have seen a lot of some successes in the startup ecosystem over here, and companies which have built these electric scooters, and even some of the following the startups, right? Some of the major automotive companies have also launched aggressively their scooter categories, e-scooter categories. So it's a huge and interesting opportunity.
Yes, definitely it is, for sure. Thank you, Natasha, for those insights. Max, would you like to take the same question?
Yes, can you just repeat the question one more time?
Yeah, sure. What drove the challenges to energy markets? What are the challenges to energy markets in 2019? And how do you see 2020 unfolding that?
Yeah, definitely. So I want to touch on something that I think Jennifer mentioned earlier, which is actually the green bonds. So what we're seeing in Hong Kong, and Hong Kong is really interesting in the sense that there is a large and increasing volume of green bonds and also sustainably linked loans, which are rewarding companies that can actually put out a statement about having a proactive climate change strategy. And for the companies that they can't raise funds anymore, and it's very difficult. There's very little money going around. But the people that can actually have their bonds subscribed, 1, 2, 3, 4, 5x oversubscribed. And I think what that is saying is that there is a shifting at the sort of ultimate allocator level, right? The pension funds, the sovereign wealths, were actually applying much more stringent controls about where the money can go, right? And actually the product creation of a green bond or a sustainability-backed loan is now seen as more of a safe space to be. Safe not only from an investment perspective, because even as we saw the COVID recovery on the equity side, like ESG, thematic companies actually have done better than just regular traditional companies, and also safe in the sense that they're not going to have public backlash. And I think this is like a sort of a dual force. On one hand, investors want to protect their money. On the other hand, they think that they actually won't be shouted against or demonstrated against if actually invested in these green bonds. So as a result of this, from my personal vantage point, there is this percolation happening from the ultimate allocators down through the funds, right? Then down into the actual companies, and then into the real economy. And this is sweeping through in a speed and scale which I think most people are sort of not fully appreciative of, or just are caught by surprise. And then on the energy side, as Jennifer also had mentioned, the terrible crash of oil prices, and now the sort of quote unquote sustained slump has actually given people a big cause for reconsideration of where petroleum is going as an industry. And I think even the kingdoms in the Middle East are sort of reconsidering whether or not they want to have their long-term fortunes tied to this particular resource, or they want to quickly and aggressively diversify. So I'm actually very optimistic. Ironically, I would say that we actually would see a lot more ambitious risk-taking, maybe from the places where there's traditionally a lot of oil wealth, as they look to establish the new sources of growth, or even just sustained economic output, right, in the post-COVID world. And I think this actually has really interesting implications for currency markets as well, because as we know, oil and dollars are actually intricately tied to each other. So as oil becomes less of a key, I think, export criteria, like we also might start to see, this is just again very very early and relatively open view, start to see different types of currencies be used in different ecosystems. As opposed to having one single unified currency globally, we might just see have more regional patchworks of currency as well. So,
interesting.
And I just want to finish with one final thought, which is like, in some ways, my personal lesson has been that currency actually and demand are intricately linked, right? So the idea of the petrodollar, which is that you can only really buy oil with US dollars, has actually been one of the strong enforcing aspects of the dollar. But if imagine in the future, right, there being a solar dollar. And what I mean by solar dollar is that, I don't mean dollar, like solar currency. So whoever wants to buy solar panels, right, have to pay in that particular currency. And solar panels become the new way that, cities, municipalities, and even countries actually fund, or fuel their energy usage. The producers of solar panels can actually start creating, a sort of interesting demand, similar to how the petrodollar created dollar demand, in order for other countries to want to have that import. So I'll leave that comment.
Sorry, Max, I just want to ask you, that's very interesting. Solar dollar, is it like a cryptocurrency, or what?
It doesn't have to be. I mean, no. I think the point of this is, and actually what's really amazing to me, and this is actually why I love crypto as an industry, is that it's actually made people fundamentally aware of the way that money works. Like, most people think money just is taken for granted. Unless you live in a country where inflation is through the roof, you don't really pay attention to how money works. But if you actually study money because of crypto, right, and you look at the way that the global economic system is interconnected, like there's a fundamental tie to actually the resources you need that are gated by the specific currency, right? So what I mean by solar dollar is, I think if solar becomes the dominant way that we generate electricity in the future, whoever is producing solar components, right, or assembling solar panels, like, if you want their services, you have to pay, in the currency that they specify, right? And if they choose a currency that's not the dollar, then you will actually start to see other countries say, oh, I need to do something to actually get this other currency in order to be able to buy these solar assets. Does that make sense? Like, I think that it could be a cryptocurrency, right? It could be definitely one of the new things that we don't even think about yet. But what I'm trying to say is that actually it's opened the conversation up to actually this idea that money itself can actually be tinkered with through the needs of the real world.
I think, Max, I really like the way you think, but I think that you've actually given a concept out there for free to probably a startup who might be already thinking on these lines. Thank you for bringing that up. So Jennifer.
Apart from the interesting points that Max has made on funding and in some of the alternatives, but some of the challenges are in terms of solar energy is having technology that is capable of storing the power generated in the nighttime when we don't have the daylight. That's one of the challenges in the area. And having, for example, power to gas technology that can store excess wind power as well as solar power for industrial use. But more particularly, one of the biggest challenges is that I think traditionally the solar equipment has not been developed regionally. They've been imported. And so a lot of the, apart from the wealthier Arabic countries or the wealthier countries in the GCC and the MENA region, there are going to be some countries that will struggle because they lack the skill set locally or regionally in their countries to actually design this equipment for green energy. So that is a major challenge in them going into this space in a big way. And that is why I think UAE, for example, and you have Qatar and then Saudi Arabia, the leaders, because they've got the funding to enable them to make that change.
Right. So these are some of the challenges then.
Yes, these are some of the challenges.
Okay. That's great. Good to know about the challenges as well. Thank you, Jennifer. Unless you have anything else to add on, I have a quick question for Max, because I think Max understands the value of money and probably a potential in a crypto or a digital currency, I guess. So that's why I've got a question for Max specifically. So how has this coronavirus, the reason I ask you, Max, because I read an article that said that the virus there has accelerated the appetite for cryptocurrencies. So I would like to know your thoughts coming from Hong Kong, because Hong Kong, Singapore, Southeast Asia, we're like, in terms of adoption, we're kind of way ahead. I think we are quite way ahead of other countries, I think. So what has impacted the appetite for a crypto or a digital currency, as per you?
Yeah, so I'll just start with digital currency first. I think these are actually two related, but actually, they have different evolutionary patterns, right? So on the digital currency side, what's really amazing is that the managing director of Sequoia China, Neil Shen, actually proposed a regional basket of coins
Right.
about 4 or 5 months ago, right? And he basically proposed a sort of basket of currencies that would include the RMB, the Hong Kong dollar, the Korean won, and the Japanese yen. And the point of this is saying that these East Asia trading partners actually have a lot of trade be settled right now in currencies that they don't get to control, right? And
Sorry,
so they're
who are we
intermediate.
talking about here? Sorry, I just missed that. Who are we talking about here?
So there's a gentleman called Neil Shen. So Neil Shen is the managing director of Sequoia China. So
okay.
the Sequoia, yeah.
Right.
He's a venture capitalist.
Right.
But it's he proposed this economic idea, and the economic idea, I don't know if it actually will be implemented, right? I think there's a lot of complexity with trying to put something like this together. But even the idea that there's now this the creation of regional trading baskets of currency, as opposed to having one single currency settle everything around the world, is actually like more than overdue. Right. What we saw recently, and just I want to give you a play-by-play of like the COVID in the U.S. and then like the shortage of euro dollars. So, U.S. economy starts, going into a sort of not cardiac arrest, but at least some sort of like seizure because of COVID. The U.S. government starts to print a large amount of money, by estimates like several $1 trillion. At the same time, the exchange rate between US dollars and other currencies go up, meaning that US dollars is actually more expensive relative to other currencies in the same instance at which there's a money expansion. Like that is an uncommon event. Like you're not supposed to see that. It seems like it's counterintuitive. But the reason for that is because the total demand for dollars in the offshore US world is actually huge, right? People estimate about like $50 trillion or so. And the total amount of dollars floating around in offshore US world is about like 5 trillion. So literally, with the velocity of money idea, you actually need to move the money around fast enough to actually satisfy all of the trading demand to actually, have people, for example, Brazilian imports into Japan get settled in dollars, and then Brazil takes that and spends it to basically buy something else from Ecuador. And once an economic crisis happens, especially in the United States, like everyone wants to rush to safety, no one wants to spend their dollars, and so there's now like a shortage of dollars in the global economy while there's a printing of dollars in the US economy. And this happened in 2008, and people sort of papered it over, but COVID is actually making it happen in a sustained fashion. It is not going away anymore. And so I think a lot of people are coming aware to the fact that their economy and their imports, their ability to actually buy electronic components from somewhere else depends on how much they have in dollar reserves, while at the same time they know for a fact that the dollar value is actually being devalued by the money supply expansion. So I think that's actually giving rise to more use cases for where the sovereign digital currencies are going to start to be apparent. And I just want to make a small mention on what's happening on the crypto side. So there's a huge amount of interest in DeFi right now, and I actually see DeFi actually as a sort of response to a retail response, right, to the fact that interest rates have now gone to zero, right? In certain places of the world, interest rates are below zero. So as a person who's worked a hard amount of money, hard amount of their labor to put savings in the bank account, they now actually have less savings on a daily basis just by keeping it there. Like, that is crazy. And so before crypto came around, there was no alternative. You couldn't opt out of that system. But now, because of DeFi, you can actually start to put your money in Compound or one of the other lending protocols, and you can get like 4-5% yield on a yearly basis. That is exponentially more money than you can get in the bank. And so there's no, any person with an internet connection and the ability to know how this works would naturally want to take some of that money and put it in, a thing that actually can have relatively sane amounts of interest as opposed to negative interest. And I think, in some ways, COVID has been the biggest acceleration actually of finding a real use case for crypto beyond just speculative asset investments. Actually, it's just interest rates. So.
Absolutely. Yeah, I totally agree to you, Max. That's why I knew that you got the right answer for me. Thank you, Max, for that. So I've got a question for Natasha. Apart from electric vehicle and carbon footprints, what kind of investments do you see in the space coming? What kind of institutional and private equity investments are getting done from an India perspective right now?
I think investments in renewable is something which is driven at a government level in terms of the policies which come through and the support which government lays, institutional support, financing support, various other support, especially if you want to buy renewable energy. If you set up a solar or a wind plant, right? What is the premium you get over it? Because it's expensive. The per unit kilowatt cost of renewables is higher than what's it for oil and gas, what's it for solar, for coal, which is the cheapest. The more expensive version is gas, right? So the per kilowatt hour energy produced from wind or solar has typically been on the higher range, despite the fact that they don't go through the currency fluctuation, they don't go through the fuel price fluctuations, which something like a gas price goes through. And these sort of investments are high capex, right? And they're long-term investments. You do it for 15 to 20 years easily. So from that perspective, over the years, because of a huge amount of production generation of silicon chip solar panels in China, the prices have been coming down. They have become grid parity, where the price of this kilowatt hour produced from renewables is, in terms of the generation cost, is the same as what it is for coal or what it is for gas, right? Mm-hmm. But still, it's driven a lot by incentives. And I think if you look at the opportunity in India, the government has been ambitious with its solar expansion investment plans. We have, as per our solar investment policy, a target of 175 gigawatts planned in India by 2022. And right now, if you look at the sort of auctions which is done, the installed capacity and the projects which are in pipeline, that itself is around 141 gigawatts, right? So there's huge amount of those targets being met, and there's a good amount of support from the government for the same. Likewise, even for electric vehicle, right? A lot of it, because these are high capex vehicles, right? So they do need a lot of subsidies from the government to really make it feasible from the consumer side to take it up, right? So I think there's a lot of opportunity in terms of, if you look at in this segment, yes, of course, I think in terms of green energy, wind and solar, they have been good amount of installation of the same in our energy metrics. So the next wave and the easiest wave, because you're talking about why are you installing this in the first place? Because you want to reduce your carbon emissions, right? So the first and the easiest way to do carbon emission reduction is to is the transportation segment, right? So it's easier for you to shift to electric vehicle than it is to sort of for a factory to move its. You can't do away with solar with coal altogether. It's the cheapest form of electricity generation, right? So that gets a little bit more hard, and you would need incentives from emission trading mechanism, which again is a policy which comes from the government. Like Australia had a carbon price and then they withdrew it. So it's all very government driven. But I think the interesting opportunity, especially if you look at like one of the previous speaker mentioned, is because this is intermittent energy. A good amount of it is required. A huge part of the cost is in terms of the storage of the excess energy, right? And the same is true for electric vehicles, where 50 to 60% of the cost is of the battery, right? And now two countries which are dominating this is US and China. And a lot of companies in India which are doing electric vehicle are just implementing those battery technologies, right? From US and China to India with some slight tweak. But India is a tropical climate. You know, you have uneven roads. You have like if you're looking at electric bus, the load bearing on a bus, because it's typically overcrowded, would be different from what it is in US or in China, right? So you have to do a lot of personalization, localization in terms of the battery technology, which is a huge tech opportunity in itself. So the battery technology, the kind of battery you have, the battery management system. So these become how efficiently you're doing charging and discharging of the battery. So these sort of things become very critical for a success or failure of a vehicle. Like if your vehicle breaks, the battery doesn't last you for, let's say, 8 years, as most of the manufacturers claim it does, then it's not economically efficient for you, because you have to go again and buy a new battery, which is very expensive. You know, so this is where I think the next challenge lies. At the same time, it's an opportunity for something which is more localized to the Indian market, Indian terrain. And like we have been successful in fulfilling our renewable energy targets, I think this is where the next wave of tech opportunity really lies.
Yeah, Natasha, on that note, I would like to ask, because I had actually been approached by a company who were looking to raise funds in EV sector, but I don't know where that discussion went. Now that you're speaking, I imagine that that's going to be a lot of investments upfront. And as you said, it has to be localized to Indian market, because I wasn't aware
most of them, they're just taking a licensed technology of a US or a China company over to, well, not China nowadays, but US predominantly, you know.
Yeah.
And the IP is still with the US company, and you can't really use, like the fast charging in US. We have a completely different grid system over here. You know, the voltage velocity of our electricity transmission generation assets completely different. So it has to be really localized for the Indian market, and that's where a lot of intellectual investment will have to go through to make something which is more appropriate for the Indian market.
Got it. But will you be, as a VC firm, will you be interested to probably explore into this?
Yeah, we have been, definitely. Why not?
Yeah. Okay, cool. All right, great. Thank you, Natasha, for that. So the next question, Jennifer. So which area are you more comfortable in speaking? Are you more like a startup person, or an investment person? Which area are you more? Startup, yeah. Okay, great. So I'd just like to know from you, Jennifer, what should the startups be doing post-COVID to build a sustainable business, scale, and attract the needed investments?
I think what they need to do is look into certain industries that are doing well, where the demand is rising post-COVID, and try to come up with certain innovations or innovative businesses whereby they are likely to attract funding, and it will help them grow and scale. So, for example, let's just take an example. Some of the clients that I had before COVID had lots of innovative creations in the automotive industry. But as we know, the local governments are finding it difficult to make decent returns since COVID started on transportation, because people are scared still, and a lot of people are staying at home. So for those type of startups, they're going to have to wait a very long time. But for example, getting into renewable and green energy is probably a good space to get into, simply because COVID-19 is eventually going to wipe out the demand for fossil fuel power generation, and green energy and renewable energy is more likely to be resilient, simply because it's use of natural resources as opposed to oil and gas, and then you got the pricing and you got all of that. The second thing is that a lot of the governments have been removing the subsidies that they used to have on oil and gas type of fuel for generating power. So this enables green energy and renewable energy to compete in terms of pricing. So it would be a good area for startups to get into in order to, attract funding, be attractive to investors. But I think primarily with this market is going to be driven in the end and in the future by what the consumer wants, and the obligation of these energy companies and governments to have energy efficient forms of power generation, and also their responsibility to reduce their CO2 emissions. And then you got the funding issues, but this is one area that I'll encourage startups to look into, because you got all the big players, all the big oil and gas companies wanting to team up with companies that are working already in this space. Either they team up with them or they acquire the entire company. So it's a good area for them to get into. So what they need to do is to watch the market. What COVID-19 has created is the areas of what COVID-19 has created is created certain industries that will survive notwithstanding. And it doesn't matter how long this COVID-19 goes on. There's certain industries that are still going to survive. There's certain industries that are doing extremely well. And there are other industries that we are all surprised are collapsing, almost close to extinction. So this is what they need to watch out for.
Yeah, if I understand correctly, you're trying to say that the oil and gas industry obviously are badly hit, and obviously UAE is one of the region big producers of oil. So you were trying to, if I understand you correctly, so you're saying that you were advising the startups to pivot into renewable and green energy space, to be either acquired or funded.
To be acquired or funded, yes.
Right. Okay.
Because this is an area of huge demand. Rather than some of the ideas that they have, which since we've had COVID-19, investors are probably not going to be interested, or it presents high risk for them, or there's not going to be a demand there because there's not going to be a consumer demand. So, you can probably park that idea and then try to start something else where there will be a demand, where you're likely to attract funding from investors or some of the big players in that industry will want to team up with you.
Absolutely, got it. Thank you for that clarification, Jennifer. So I've got a very interesting question. Max, for you. Macro and geopolitical factors have played an outsized role in energy markets. What should investors be watching out in 2020, in this year?
I think one of the most interesting things is going to happen in about 80 days, which is the U.S. elections. And I think, the direction of that U.S. election is going to have, ripple effects across the entire, landscape. On one hand, we have President Trump, who has taken a very, I would say, an unexpected set of decisions, during his tenure. But at the same time, he's driven a lot of investments into the stock market, because with interest rates, at basically zero, and you have money, like the only other place you want to invest it maybe is in equities. If the current ministry gets replaced with the incoming, the challenger with Joe Biden and also Kamala Harris now, I think we're actually going to see a very substantiated focus on aspects of the Green New Deal, which Europe has already implemented in some degree, and now we're sort of seeing being considered in other places as well. A very ambitious rebuilding a completely new infrastructure, from the bottom up, actually, that is green and sustainable and optimized for a post a cleaner energy future. And I think that is my personal hope, is that we actually move more in that direction. I think that otherwise, we're sort of running out of time because of climate change, sort of happening on a year basis now. It's supposed to be even a decade basis. And I think another interesting thing I would love to see more of is how countries start to think about, shortening their supply chain in order to actually, be able to feed themselves, right, provide for their citizens, while encouraging the local population to be able to innovate, effectively. I think we're sort of stuck at home for an undefined part of the future, and that actually is a really phenomenal chance to pay more attention to what's in our local surroundings. As global citizens, I'm sure many people here on the video chat, travel quite a bit and live between airports and taxis. To be the sort of chance to stay at one place and really consider it has a lot of benefits for designing more sustainable businesses. Like, I'll share one crazy idea, like this idea of a circular economy, which always has been a very sort of hippie-like concept. People are like, oh, like, why do you need that? Like, it seems very inefficient. You have Adam Smith, competitive advantage of countries. The companies that actually have circular economies have actually seen the minimal supply chain disruption in COVID. And actually, they're the ones who still can operate a business. Everyone else is just like, their stocks are empty, they have nothing to warehouses, and they don't know when they're getting more supply.
Do you have an example?
I think one aspect is maybe the food industry, and specifically the meat industry. So in the United States, one of the craziest outbreak centers has actually been the meat packing and slaughterhouses. A lot of people working in slaughterhouses are undocumented. They're not, part of the protected workforce. And as a result, when conditions were rough, they were actually forced back to work, and they caught COVID, and then became a terrible thing. So a lot of meat prices started being rationed. There was actually a shortage of meat. So if you were a customer going to a supermarket, you only get 3 pieces of meat, right, in the United States. And then there is the plant-based meat industry, which has the production center next to the trucks, next to warehouses, and so there's been no supply disruption at all. And as a result, they've been able to eat market share like crazy, right? While the traditional industry has been unable to deliver. So I guess what I'm trying to say is, I think practices that were previously considered to be nice to have, or even like luxurious, are actually turned out to be competitive survival characteristics in the COVID situation. And I think will continue to be more so post.
Yeah, I mean, very good points, Max. The supply chain that you mentioned about, I mean, we're right. We don't see each other anymore. We're not on flights or airports before, like, as you rightly said, living between airport and the hotels and conferences. Very, very good points there, Max. Thank you for that. So, Natasha, what do you like to add something over here? The micro and the geopolitical factors that have played outsized role in the energy markets, and what investors should be watching now?
On something Max said, because especially on the supply chain side, he was talking about the meat packaging industry. So in the US, right, this meat packaging industry is concentrated by 4 major players, and it's highly efficient, highly organized. And now, because of this high efficiency of the supply chain, this current pandemic has brought this entire system to its knees. And in India, where it's still largely an offline market, very segregated, small pockets of meat processing everywhere. It's worked well for us from that perspective. Yeah. So I think, when things get too efficient, they start becoming inefficient at some point, and that's what the pandemic has got us to.
COVID has exposed
laws of our efficiency. Yeah.
Right.
Can I ask a question just to Natasha, actually? I'm curious how, Natasha, you sort of see like Asia being able to meet energy demands in a sustainable fashion. I think that you have a really strong background in electricity, right? You sort of have studied the distribution and storage and generation of electricity. Like, do you see a path where the 2 billion people, right? The 300 million people in Indonesia, 1 billion people in China, 1 billion people in India. Like, do you see?
I will do a counter question to you. If you really think solar and wind energy is clean. Have you taken the life cycle of the carbon emissions which go to produce solar panels? It's huge. Like we always negate it. We get like, oh, it's just small emission reductions and it's efficient. But I think if you take the life cycle, it's really quite a exhaustive way to, in terms of the carbon generation which is done to really produce these solar panels. And I think the second point, these are intermittent energy. You would still need a baseline energy. Imagine if you have a grid and you have this intermittent energy which keeps fluctuating. How would that affect your transmission systems? So you're saying going 100% solar or 100% wind, unless and until you're in Norway and you can sort of do hydro. That's another thing. Hydro is still, it's not that intermittent. You can still plan for it and coordinate around it. But going 100%, it would be a challenge. But like I said, there's opportunity, there are pockets of opportunity. So you can do a percentage of your grid towards this, right? Because beyond the point, if you, especially for your transmission and your distribution network where electricity comes from the power generation as a side of things, if your transmission, our legacy transmission systems can't take a load of more than 20% of it, intermittent energy. So you can imagine the sort of upgradation you need to do in your transmission lines. And this is, I'm not just talking about India, this is so prevalent in US, where you see these huge power surges of these fluctuations which have happened in New York and other places, and those sort of assets are in dire need of investments prior to your investments which you do in your new grid technology, because our transmission and distribution lines, these investments have been made like 40, 50 years back. We never thought of, integrating these sort of intermittent fluctuating energy generation to your overall energy generation metrics. So yes, I think a part of it would be renewable, but yes, more and more emphasis towards, from the distribution side of it, how consumers can be more efficient. So if you install solar panels, it reduces the load for electricity generation for peak energy, which is where a lot of investment comes in for gas, your gas turbines, your gas electricity generation technology, which is huge. So if you start building these solar panels, if you at a distribution side of it, you install these solar panels, you reduce that requirement for the grid to be able to invest in the peak demand, especially during summers, because that gets filled locally from your own consumer side of it. The second side of it is, of course, the vehicles which you use, which consume quite a bit of, which contribute quite a bit of emissions, and that's the easiest to trip towards clean energy. So that's another way you do it. Then you focus on energy efficiency. So I think it's a phased manner on which how you can try and be more sustainable. But yeah, you just can't kiss goodbye to coal altogether, because they really provide you the sustained energy which is required for you to do your day-to-day operations.
So does that answer your question?
It definitely did. And I have a crazy idea. I just want to share this with you because I think, you guys are very open-minded and think about this. Like, what if actually the future requires us to just decrease our total energy consumption by like 80%? And like, instead of having that be like the aspirational goal, like we set that as the baseline. We say, okay, like, can we build a world using technology where we actually need, like, we should just fundamentally consume less resources and still actually stay mostly alive? And I think about this in two ways, right? One way is, it turns out actually COVID has made us realize that a lot of the things that we thought we need, actually we don't really need. Like 3 meals a day and like some TV, and like basically like you can survive. Like you don't actually need to shop every day. You don't need to buy new things. You don't need to recycle your electronics or your clothing or other things. A lot of this consumption actually was built into you so that we actually can generate GDP. That's the first takeaway, I think, from COVID. The second is that VR is going to be like amazing. And I have an Oculus headset over there, and I've been using it during this sort of resting phase. But the ability for VR to deliver exceptional experiences, right, to an individual with a marginally zero carbon footprint, I think is something that most people haven't started talking about yet. Like the aspirational lifestyle of someone living in like the American dream, a single standalone house, a bunch of kids, a car, like fancy property, like that is not going to be available to most people just because the carbon footprint is too big. Like we can't afford to actually scale that times 7 billion people. However, the experience of having a VR headset and having crazy, interesting life experiences, right? Without actually having to dig things out of the ground, like heat them up, burn them, pound them into a Ferrari shape, and ship it across the seas to actually have you a Ferrari for you to drive a Ferrari for 25 minutes. Like, I think the ability for us to move to an experience economy could potentially save a lot of electricity and energy usage and resource usage, especially for the people coming up, right, from the sort of 3 billion people, who are currently not living, at the very high levels of consumption. So I just want to put these two sort of ideas out there and see, what you guys think about them.
I think, Max, I definitely agree to point one. Like, we just can't just lead our everyday life with bare minimum needs, as you rightly said. Number two is quite interesting. So how is that going to disrupt the tourism industry if you're going to have a VR experience sitting at home? That's going to disrupt the tourism.
I would say that if I was in charge of a really fancy tourist destination, I would buy a lot of like high precision 3D cameras, and I would scan my tourism destination, and I would be the responsible for building that model, because someone's going to build that model. So it might as well be me, and I get to monetize every person who comes to VR, version of like, this beautiful temple. And that's the way that you actually get to have now hundreds of thousands of people visit you on a daily basis.
But I'm not sure if that'll result in consumer spending going down, because I think the same thing will be replicated in the online world, where right now skins, the one which you use in gaming skins is a huge way where people spend a lot of money in games, right? So I think this entire experience, if it goes online, the amount of money which we will spend will replicate to more or less the same extent in terms of gadget.
Yeah. So GDP wise, you won't see the difference. $100 spent on H&M or $100 spent on your in-skin game, it's the same $100, but the carbon cost is much lower on the in-skin games than there are on the H&M clothes.
There is a point, but still I love traveling. I would love to have
the experience.
The actual experience.
Yeah.
But yeah, I mean, that is obviously a business case. If somebody else is building, please, you can go ahead and build that idea. I mean, obviously you share that idea with us. Okay, great. I mean, I think we are now on just covered 1 hour now. So I just want to know the closing remarks from each of you. This is a weekend. This is like a Friday. We're going to be all free and go and probably have virtual parties after this. Are we having virtual parties after this? Okay, what are your
tea party? I'm having a tea party.
Max is a VR person, so he's probably going to be wearing a headset and running around. I can imagine that already. So what are the closing remarks, Jennifer, from you before we go goodbye to the week?
My closing remarks to startups will be keep reading a lot about what's going on right now. Be mindful of the industries that are doing well, notwithstanding COVID, the industries that are resilient to it, and try and get into that space. And it's a good opportunity to do well and make money, because we got to remember that some of the best and most successful companies were born out of the last global financial crisis. So there's an opportunity for them out there.
Absolutely. Be positive, stay positive. Thank you. Natasha.
Yeah, I think with this current pandemic, and everyone at some point has some aspirations to do a startup opportunity. So this is the right time, right? You're all working from home. So make the most of this time, manage it well, and try and explore the opportunity of your side startup towards this current pandemic. And I think there's a lot of like traditional businesses are now going online. So there's a huge opportunity in online, especially how malls and offline retail has been transformed with the e-commerce domain. So there's still a lot of opportunity to explore, and I think it's the right time for disruption and work on something on the side with your team or a couple of people who are close to you. So make the most of this time. Don't let it just go by, and don't be depressed about it.
Yeah, please don't be depressed about it.
Don't be depressed about it. Yeah.
Yeah. Thank you, Natasha. Max, your closing remarks, please.
Yeah, well, I first just want to say my, very big gratitude to you, Sunny, for organizing this amazing event and introducing me to these wonderful, super smart people. I've learned a lot actually listening to the sharing today. I think that COVID is kind of like the Cambrian extinction event. So for a period of time, like dinosaurs were like the biggest animals on the planet. They like had a stable, top of the food chain ecology for like almost 100 million years, something like absurd. And then, there was an extinction event, and these tiny mammals, which were basically no bigger than like rodents at the time of the dinosaurs, became actually the largest and most powerful type of, dominant species on planet Earth. So what's happened with COVID is actually a similar extinction event. Like people don't really fully understand it yet, but the old playbook is just done. It's game over. So like, if you are part of the old economy, you should probably like try to get a lifeboat. But if you're part of the new economy, like, and you're right now very small, like this is actually the best time for you to grow into, a behemoth. So I am very, very excited to see, where this goes. And I love to stay in touch with you all and have a chance to learn and discuss again. Thank you.
Absolutely, absolutely. That's the whole point of our VCTV. That we have the shows Monday to Friday, and the primary reason for that, we want to stay connected to everybody in the ecosystem. So yeah, that brings us to the end of the show. Thank you for your time or your contribution on a Friday evening. Max, great insights, dinosaurs, yes. So you can watch our shows Monday to Friday at www.latoken.com/events. Max, please feel free and have a look. If something interests you to talk about, and you can join another panel, and I'll be happy to, more than happy to have you again on the panel. We probably have a gaming panel as well, and I can see already there's a fit there for you, Max. Thank you. Thank you, ladies. Have a great weekend. Stay safe, stay healthy, and talk later. Let's stay connected. Take care. Bye.
Bye. Take care.